Good morning everybody, it's Christopher from Serene Education with the 4 Majors Notes update for the 13th of January 2014. Interesting, non-farm payroll last week Friday came out and we saw a lot of changes in sentiment. Really, I mean, we started with poor Swiss franc inflation report data, followed by a very poor manufacturing production month-on-month figure for the UK market, and then we follow that up with negative figures for the unemployment change for Canadian dollar, as well as a weak unemployment rate, and then the big one, the non-farm payroll. The non-farm employment change figure came out very bad. The prior figure was 241,000. They were forecasting 196, so they weren't expecting as much as the previous figure, but they were still they were expecting 196,000, and it came out at 74,000. So not really good. I mean, only coming with 74,000 new jobs created. Not very good after a very strong prior month. And then the only saving grace was the unemployment rate, which was great. The unemployment rate dropped 0.3% from a prior figure of 7% to 6.7%. So very mixed data. A lot of negative data coming out of out of Friday in particular, including the non-farm payroll result. The unemployment rate was probably the only saving grace for the US market. But what has it done for the 4 majors? Well, knee-jerk reaction primarily. We have seen on the daily, you can quickly see here, a slowdown on the negativeness that we've seen over the past week or so, as euros failed to break above the prior monthly fib level highs here, which happens to be an October high, a December high on 2 prior occasions, and also a January high. 61.8 monthly fib failing to be breached, and in doing so we've seen further consolidation or pullbacks on price. However, after the news on Thursday and Friday, we have seen a bit of upside or positiveness for the euro against US dollar, and we have seen price stalling just before the 50% monthly fib retracement level here at 1348 and change. So to see any further upside, we would need to see price trading above the current high, which would be the Friday high or Sunday evening high. So if you drop down to the 4-hour time frame and just move this over, you will notice that on the 4-hour time frame, the Friday high has been the highest high that we've had recently. The evening last night started, we haven't been able to see price break above that. So in order to see any further buying opportunities for this particular pair, or euro against the US dollar, we would need to see a breach of 1368 and change to see any further opportunities back up towards the prior resistance level high at 61.8. Failure to do so would see price reattempting the current lows that we've just come from or seen recently at 1356 and change, but a breach of that or breach would likely see price moving back towards the lower low or 50% monthly fib low here at 1349. So we have seen some euro strength. However, to see any further opportunities to purchase this for this week in particular, would need to see a breach above 1368 and change. Failure to do so would see further consolidation with an outlook for further lows. On to sterling against US dollar. Here again on the daily, you can see quite clearly the monthly fib here at the 38.2 being tested over a number of months. In fact, November going into December, we saw a lot of resistance for this particular pair. However, the latter part of December, we saw price breaking above it, however putting back sharply and now consolidating at the upper side of the monthly fib level here at the 38.2. So you'll notice that the long-term sentiment still up. However, you can see a lot of negativity intraday, and the R-squared is complementing that selling. So very aggressive negativity coming through now for the sterling against US dollar, and that primarily I presume people getting back to the desk after Friday's tradings and noticing a very weak manufacturing production month figure on Friday has seen some of that sentiment being eroded. If we are to see any further selling or shorting opportunities for sterling, we would need to see price closing lower, and obviously the candlestick turning red to complement that negativity. You can quite clearly see that we had a number of sharp pullbacks for sterling over the past number of months. However, not once did we see any negative candles coming into that. So these were just clear profit taking opportunities in a very strong trend. So still above the monthly fib level, which is still a positive signal. We would need to see a breach of that for that negativity to start showing, eroding price upside. However, we would need to see candlesticks changing ideally on the daily or 4-hour daily You can see we have very mixed reactions on our daily and our 4-hour time frame. Just dropping down to the 4-hour time frame just to show you that. Let's move it on. You can see price on Friday after a very weak production figure, we saw negativity coming in, but the moment the US data came out for non-farm payroll, very weak non-farm payroll, we saw sterling taking that back again quite aggressively. However, not really maintaining that momentum higher, primarily because of those very weak figures for production month-on-month figures. So that's still very much in favor, and you can see that the sentiment has dropped recently after that. So if it still maintains about 38.2 fib, still look for that positive sentiment to reflect upside. However, we do see a breach of the 38.2 monthly fib level, which would also breach the institution moving average. That would stem or look for more of a negative setup for sterling against US dollar, and then we could start looking to trade prior swing lows. US dollar Swiss franc, here again after that very weak data for the non-farm payroll, we had a very negative start to the day in terms of the CPI report for Swiss franc, which saw the US dollar gaining a bit of strength on that outcome. However, when non-farm payroll came out, you could see that prices dropped quite aggressively, and on the daily you can see that's now formed a swing low. I just want to back it up so you can see we've had a major support and resistance level roughly around the 91.78 mark. A lot of support here, price support, and since September we have seen price breaking below that level, and now we've seen a lot of resistance for price. So, and you can see the institution moving average still governing this. So long-term sentiment, still one of negativity, but you can see a lot of positiveness coming through on our shorter terms, and that's primarily because we saw a nice comfortable bounce on our weekly 38.2 fib level recently. We saw a lot of upside for positiveness for the US dollar against the Swiss franc. However, that's been taken away clearly after non-farm payroll figures came out, and subsequently that's forming a new swing that failed to break above the prior swing high here, which was required to see any positiveness for US dollar against Swiss franc. A break above the institution moving average would have also stemmed to that. You can see the candlesticks are very much still negative. We have a blue arrow, however the candlesticks are very much negative, so we should be looking for that bias still to favor the downside. So look, be patient, wait for the confirmation, and then trade the outcome. Last pair of the day, US dollar Japanese yen. I did mention if we didn't see a breach of the 61.8 monthly fib level, price has been very consolidated at this level since mid part of December, then we could see price dropping even lower to test price support and resistance level lows. We did test this prior current consolidation low here, but subsequently you'll notice that on Friday's outcome we saw a very bearish engulfing candle after an indecision candle the prior Thursday, and then on the open last night we saw a slight move lower, but you can see through the start of this morning we've seen the US dollar falling even lower and trading back towards the daily fib level support level here at the 23.6 level. You can quite clearly see a lot of current prior resistance and support and resistance at this level at the 103.37 change mark right now. Get below that, then we should be looking for further opportunities to the downside towards the 38.2 level, which had happened to be a price support and resistance level low, and then back towards 50, and then back towards our 61.8, which complements our monthly fib level here at the 50% retracement, which is also our institution. Notice the long-term sentiment still very much up. However, a lot of negativity intraday, or daily 4-hour working away intraday, and the R squared has been complementing some of that. So if we fail to see the 61 or the monthly fib level highs here being breached, then we should start looking for consolidation with an outlook for further pullback lows to be attempted. Okay guys, short and sweet today, to the point. Be aware, this is the week after non-farm payroll. We have seen some movement, but look to see if there's any further opportunities today in terms of news. Japan having a bank holiday last night, or on Monday. We had Australian figures coming out last night, home loan figures as expected, 1.1%, no change there. We don't have any news for euro or sterling today, but we do have the federal budget balance figures out later this evening at 7 p.m. GMT. So it's going to be quite an interesting one to watch for. So other than that, very quiet. But other than that, have a look and see if there's any opportunities. And if you are looking to trade, please back it up with some money management rules. Very important. Got to adhere to money management rules. Other than that, keep it simple. As I keep mentioning, you must keep it simple because trading is very hard as it is. You don't want to make it even harder. Keep it as simple as possible. Follow the rules. Back it up with some money management, and you're on for a winner. Have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.